Morning, everybody. Welcome back. Sorry I missed you last Wednesday. I did want to follow up to that conversation that we had about appraisal gaps and how we can restructure that loan and add mortgage insurance. I believe we've talked about mortgage insurance before, but it does bear repeating because I don't want anyone to decide not to finance because they have to pay mortgage insurance. That is not a good reason. When we're talking about mortgage insurance and you add that to your loan, you are signing on to pay for it for a minimum of 2 years. Now, FHA is the exception. Everything I'm going to talk to you today about is with regards to conventional loans. With FHA, mortgage insurance is a lifetime cost unless you put 10% down, then you have to pay it for a minimum of 11 years. But 9 times out of 10, most people have it as a lifetime cost. And really the only way to get out of mortgage insurance on an FHA loan is your ability to refinance that into a conventional loan. And all of that, of course, is contingent on your equity position of the home as well. So we're going to talk about conventional. Now, like I said, when you sign on for mortgage insurance on a conventional loan, you're saying I'm going to pay it for at least 2 years, but you can request early removal. And if you need to do it within the first 2 years, really the only way to request early removal is only if you have made substantial improvements to the home. And I mean substantial. That means you gutted your kitchen, you finished out your basement, you redid the master bath. I have a couple people that ask about landscaping. Landscaping does not count. You don't live on your yard. You may have dumped $50,000 into it. It may be beautiful, but that is not considered in a home's value. So it has to be within the home, improvements to the home, and it needs to be substantial. And then they will consider removing it. Now, if it's been more than 2 years, you can always request the removal, but they're going to look for certain things. An appraisal will have to be done, and you're going to have a 25% equity position at this point to remove it. When you're typically signing on for mortgage insurance, it usually takes more than 2 years for it to fall off the loan automatically, which happens at 78% of the home's original value, what you bought it at. So if you're requesting early removal, you've got to get the appraisal to substantiate the new value. Appreciation is considered, but because you're shortening the term of what they actually probably would have collected, you've got to have 25% equity in the home now. Now, for those of you who might not be able to refinance, might not be able to request that removal, there are ways to actually improve your mortgage payment. If you make principal reductions to your payment monthly, there is a process called a recast. And what that does is you can make a one-time principal reduction to your loan, and they will reset the principal and interest payment based on that new loan balance after the principal reduction. Now, they will not consider collective payments. So you can't make $1,000 every month for a year and then ask them to recast it. It has to be a one-time cost. And typically it's a minimum of $5,000 for them to consider it. But this is a good way to navigate that mortgage payment and get it down a little bit faster. So if you're paying enough where it would add up to over $5,000 over a year, maybe don't make that principal reduction payment each month. Save it up, do it one time, do a recast. Some clients, investors do allow that to be done once every 12 months. So something to look into, and some do charge a fee of around $250 to do that. But if you're helping reduce your overall monthly expense in that mortgage, it might be worth it. Now, mortgage insurance does fall off the loan once the principal balance reaches 78% of the original value of the home, which you purchased it for. So that does take time. But like I said, there are ways to navigate this. Mortgage insurance is a very big, broad topic. So if you have questions, please reach out to me. Let's have that conversation. I don't want your decision not to purchase a home be because you have to pay mortgage insurance. It should not be an end all. There's ways to navigate this market and help you get into a home even with mortgage insurance. So please give me a call. Thanks for listening, and I'll see you on Friday for the market update and weekend report.